Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
Good morning, everybody. Welcome to another edition of Wealth Coffee Chat, our Friday Finance edition. What's a broker's favorite pickup line? You must be an investment property because I see potential. Been a couple of weeks since rates have moved, and most lenders should have moved their rates by now. If your lender hasn't actually moved your rate, maybe it's time to consider refinancing to another lender. Here are my 4 steps to negotiate your rate with your lender. Now, the first step is to take a look at your current rate and get your broker to compare that with what's actually available in the market. Now, the reason why we want this is to make sure that we know the rate we'd like to get. We like to be offered with our existing lender. Once you've had your broker do a comparison between your rates and what's available in the market, you get them to request a rate review with your existing lender. Now, generally I say if the rate that the bank or your lender comes back with is within 0.1 or 1.2% of what you could get elsewhere, then it may not be worth refinancing. We all understand the amount of paperwork, the documentation, all of that that's needed to actually get a loan approved these days. It may not be worth going through that process, changing bank accounts, all of that. However, if your lender comes back and doesn't offer a rate anywhere near what's available in the market, then it's time for you to give a call to the lender and see what they can offer. I can't tell you why there is a difference between me calling on behalf of my clients and then you guys calling directly. But we've had cases in the past where there has been an actual difference. So once you've made that call, you sit down with your broker and go, okay, what did the broker get? What did I get? And what's available in the market? Morning, Courtney. Thanks for joining. And the last part to that is to actually call the lender and ask for a discharge form. Now, the reason why we do this is because most banks, and especially the big ones, they have a separate team that looks after keeping clients. Now, we would think that the moment we call to request a rate review and negotiate the rates with the lender, they'd offer the best rate, right? I've seen many cases where we've had to go down this route and request a discharge form, and when the retention team call the clients back and ask the reason why they're refinancing, all of that, and they find out it's about the rate, bang, they get an additional discount, and we end up accepting that rate, and now you've got a really great rate with your current lender. Sometimes it feels like a tedious process, but when we understand all the different areas where we can negotiate and we go through that gives us an opportunity to get the base rate out of the existing lender. Now, if you still don't get a great rate from that existing lender, that's when the conversation is about refinancing. You don't have to, just because you've taken out a 30-year loan, it doesn't mean that you have to stay with that particular lender for that full 30 years. My recommendation is always to review your existing loan with your team to make sure that it's relevant to the goals that you are trying to achieve when it comes to your finances. Since there's been 3 rate cuts since February this year, and on previous Wealth Coffee chats, I've shared up to how much this has probably unlocked in terms of your borrowing capacity. And for some people, it's between, it can be anywhere between $20,000 to almost $100,000 worth of additional borrowing because of these rate cuts. Now, up to 100,000 people have refinanced their loans since February because their particular lender hasn't actually been providing them with the best loans that are meeting their finance needs at that particular time. Tando, how early can you refinance a new loan? There's a couple of layers to that question, right? The short answer is, for most lenders, you can refinance at any time. But usually you want to look at, 12 to 24 months of refinancing your loan. Now, brokers, we have something called Clawback. So if you refinance your existing loan with another lender within 12 months, the lender claws back our commission. And between 12 and 24 months, they can claw back a portion of our commission. What I would say is that as long as you're talking to your existing broker, there's no reason why you can't look at refinancing your loan, because we want to make sure that the loan that you currently have is going to be suitable for what you're trying to achieve. And sometimes we know that there is different stages of the loan, and sometimes you need to work with a second tier or third tier lender to get the loan done, because you've had to sort some things out, and then 6 months later you're in a position to be able to refinance to one of the top tier lenders. We understand that that's part of the journey, and that's why I said before, when we get a loan, it doesn't mean we're stuck with them for 30 years. Those loans can provide results based on our current needs at that particular time, but our needs will change, and hence our loans will change. Now, with refinancing the loans, there is obviously a potential to save on interest, because we want to make sure that we're getting into a loan that has a low interest rate. but it also means that lower repayments. Now, if cash flow is something that you need to manage, then absolutely what you want to do is refinance to a cheaper rate and then reset your repayments. But I encourage everybody who isn't struggling with their repayments to make sure that if you're refinancing, keep the repayments that you've been making previously, because the additional repayments that you're making is accelerating how fast you can pay off your loan. The other reasons that people have been refinancing is obviously to access equity where if it's available. Now, the value of property prices have still been increasing in most states. So there is a potential, if you're able to borrow more, to access that equity, maybe to do something with your family, maybe to make some renovations with your home so it can improve the value and you can access more equity when rates come down a little bit more later on. Or potentially you could unlock it so you could look at purchasing an investment property, and an investment property can actually help you pay off your home loan faster. So that's something that's worth having a conversation with your team about. And sometimes the current loan doesn't actually suit your needs at the moment. And like when I answered Natando's question, often we get a loan that is suitable for us for that particular moment, and it serves a particular purpose. And once that purpose has been served, then we would look at refinancing. Now, refinancing to a top tier lender can be multiple steps. Now, for example, I've had clients where they're self-employed, haven't done the taxes for a couple of years, purchase a property, needed to settle on it. So what we've had to do is we've had to go to non-conforming lenders who don't require all your tax returns, and we've had to get the loan that way. We've had to put more money in there. And so once the clients had caught up on their tax returns, we would then look at lenders who only needed to look at 1 year's tax return and access a little bit more equity to pay them back because they had to make a bigger deposit. And then once they've got 2 years, then we refinance them to a top tier lender. Now they know that, there's how much income you'd actually need to be able to complete the refinance. But that's an example of a 3-step process I've had to go through with a client, because when they came to me, they didn't have the documentation needed to do a loan at a top tier lender. Didn't mean we couldn't do something. And that first loan was they purchased a property, they had to settle on it. And we didn't want to keep them in those rates for 2 years. So they understood that there was a 1 year time frame for them to complete their tax returns so we can use the first year. And then after 2 years, we could refinance to a top tier, because most banks require at least 2 years financials for self-employed to be able to get really good rates from the top lenders. So keep that in mind, that's the reason why you want to review your rates every single year, because you want to make sure that that loan is serving your finance goal for that particular time. Low doc loans. Tim had a question. Low doc loans for an acquisition that is cash flow positive using company trust structures is possible. The short answer to that, Tim, is yes, it's possible. Obviously, we'd have to get more details on how we could do that. But yeah, low doc loans to purchase a cash flow positive property using company trust structures. Yeah, absolutely, that's possible. Definitely reach out to our team if you want to have a conversation about that, because we can definitely help navigate that with you. But yeah, 100%, it's definitely possible. You just got to make sure that we don't want to set it up in a structure that is a trading business. We want to keep our investment acquisition separate to our income generating businesses. So hope that's been helpful today, guys. Wish you a wonderful Friday. Rates on that. We've got quite a few lenders that can do that. Just a hazardous guess of what the rates would be, I would probably say between 7 and 8%. But definitely the key here, Tim, is to make sure that we get the lender that is going to be able to lend to you before we start looking at the rates on that one. All right, guys, have a wonderful Friday. Enjoy your weekend, and I will catch up with you guys all next week.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.